If institutions are here, am I too late? Is this a crypto super cycle? And when does Bitcoin hit $100,000? These are some questions that you may be asking yourself and that are asked prominently across the crypto sphere. So today we're going to take a look at this, take a look at the market overview, as well as some news later on in the video. Hey guys, Sheldon Evans here, welcome back. Or if you're new here, don't forget to hit the subscribe button. Go ahead and follow me on Twitter at Sheldon Evans and at YMHNFT. This is my NFT project that is launching on the 14th of January. That is the mint date. Don't mint anything before then. Don't send your money to anyone. If you want to be a part of this project, you will get 2 additional NFTs for free in the future that you'll be able to mint: a Metaverse avatar project, as well as a 2D profile picture project, as well as integrations into games, investments in different Metaverse projects in different spaces that we have across the Metaverse. Got a ton of stuff planned for the community. We've got collaborations with other projects and giveaways and so on. It is going to be somewhat of a whitelist only mint, meaning that if you don't join the whitelist, you're not going to get access and you're not going to be able to mint it. You're going to have to buy it on the secondary market. So the only way to get a whitelist right now is to try and join the Discord. So join our Discord, enter the giveaway if you haven't yet. It'll give you an opportunity to perhaps win one of these NFTs, as well as $50,000 or your share of $50,000, and you can join the Discord and get an entry for doing that as well. So the link to this is on the Twitter, on my Twitter. If you haven't yet, go ahead and check it out. Enter the giveaway, and I'll see you in the Discord. It's a fun place to be. We chat a lot. There's a lot of cool vibes in there. Everyone's sharing cool information. And if you do want access to the private community after we launch, then you're going to want to get yourself one of those YMH NFTs. Now let's hop into the market and see where we are right now. Bitcoin is still below that downtrend, the multi-month downtrend that we broke to the upside after the major crash back in April. Now, after Bitcoin did make this huge move to the downside, there was a lot of trust, a lot of hope that exited the market. Retail investors got shaken out. Institutional investors got somewhat shaken out. So today we're going to take a look at who actually got shaken out the market, where the crypto market is headed in 2022, and how do you identify the opportunities that will bring you those massive 10 to 100x gainers in this year. Now, over the past 2 years, 2020 to 2021, we have been on easy mode. If you threw your capital at a coin with a solid narrative, pretty good development behind it, some good marketing, and perhaps just a solid community, you would have made some significant gains over the past year. Now, this could be a coin like Binance Coin, could be something like Solana, Cardano, Terra, Polkadot, Avalanche. All of these have had these key ingredients that I've just mentioned and have led to significant gains, whether that's 10 to 100x gains over the past year to year and a half. Now, finding these gains in the top 10 to 100 coins is not going to be as easy as we head into 2022, simply because of the amount of capital that's in the market this time around. Last year, this time, we were at a $1 trillion market cap, may it have been. Now it's at $2.3 trillion. Bitcoin is almost $1 trillion asset. At one point, it was $1 trillion asset, meaning that the entire amount of money that is in the market right now, or that was in the market 1 year ago, is more than what we have in just Bitcoin at this moment in time. So, or less than what we have in just Bitcoin at this moment in time. A $500 billion market cap when I mentioned, I think in January last year, we now have more than that in just Bitcoin at this point in the market. So moving this amount of capital, moving a coin that is a $42 billion market cap, to get a 10x out of that, we're going to get a massive amount of capital injected into the market to get the significant growth. And I don't believe that's going to happen as easily as we've seen in the past year. Even though we've had significant gain or significant growth in the market over the past year, we can see that moving this amount of capital into the market is a lot more difficult this time around. And I'm going to show you exactly why that is. So if we take a look at the number of addresses with a non-zero balance in Bitcoin over the past year, we've had pretty much an up and to the right growth. Bitcoin has been growing as new and new market participants have been entering the market. But if we take a look from the peak back in May, we have pretty much had a sideways movement in Bitcoin active addresses, meaning that we haven't really got many new market participants in the space. And this is correlated with the overall crypto market cap as well, and the overall total amount of money in the market. We've seen a pretty much sideways ranging movement for the amount of money in the market since around mid-September 2021. If we even go back to May 2021 when we had the crash, we're pretty much at the same point, meaning that even though a lot of money did exit the market at one point, it has come back to the same point that we were at many, many months ago. So in order for us to see the significant growth that we had in the market back early in 2021, like we did have this huge run up here from around a $400 billion market cap all the way to a $2.5 trillion market cap. In order to see the significant growth, we're going to see a lot new external capital entering the market rather than what we've been seeing over the past few months, which is a rotation of capital moving from larger caps to smaller caps to mid caps and so on. As you guys might have remembered from previous videos or older videos, the cycle was moving from Bitcoin to large caps to mid caps to low caps to micro caps, and that would recycle. But we're seeing somewhat of a decoupling happening this time, meaning that coins pop off at different times depending on where the narrative is shifting. Now, whether the narrative shifts to metaverse coins, we see capital shift to that. Whether the narrative shifts to DeFi, we see capital shift to that, rather than this simple cycle of capital from larger to smaller cap coins. So what does this mean? It means that you have to narrow your focus this time around. You can't simply take a look at the market, throw your capital at the top 10, top 100 coins or things that interest you and hope for the best and go away and come back to 10 to 100x gains. That is not going to happen this time around. You need to narrow your focus to something that interests you. Now, whether that is in DeFi, whether it's Metaverse, whether it's NFTs, whether it's GameFi, whatever it is, you need to narrow your focus and become a master in that specific niche, because crypto has evolved and it has matured to a point where you're able to find something that interests you specifically, get super hyper focused on that, get super knowledgeable in that specific area and that specific niche, and become a master of that and make the most gains in that area. Because there will be opportunities arising in different areas like this that'll allow you to capitalize if you understand what is going on in that specific niche. Now, one of the niches, of course, that I've spoken about in previous videos that I do believe that is going to be a trend for 2022 and beyond is, of course, Metaverse and NFTs, simply because that is where the world is shifting right now. It's the most obvious narrative, and it's the most clearly the one that huge institutions and corporations are focusing on, because why? That is where the most money is to be made. We've seen this happen in the crypto market over the past year, as we've seen NFTs and GameFi skyrocket. We've seen gaming brands absolutely accelerate. We've seen Axie Infinity bringing in multi-million dollars of capital into the market, and this sort of collaboration with GameFi, meaning DeFi and gaming put together, we see the mass adoption of crypto. And I've said in previous videos that the more fun or the more exciting it is in this industry, the more capital and the more eyes that it will attract, simply because that is human nature. The reason finance has been sort of boring over the past many years, or the reason that crypto has overtaken that, let's say, over the past few years, is this great wealth transfer. The great wealth transfer from the older, boring boomer capital over to the younger generation that are now investing and playing with these newer, new age protocols that are actually fun and interesting to play with because they have such easy access to it. So if you want to play a game and earn money, that is a lot easier than simply sitting in front of your computer and trying to manage your own finances with credit cards and so on. So I think it's a lot more interesting for the younger generation to be interested in crypto, and playing with gaming brings a lot of new eyes to crypto as the world moves and advances to this new digital virtual world that I think we are headed into. So I think this is a very big focus for me and one that I'm quite interested in myself. So let's take a look at what is happening else in the market. One thing that we need to take a look at is this rotation of capital that I just mentioned, which Raoul Pal comments on quite interestingly on Twitter. So he says there's a lot going on in the digital asset space, but nothing going on is the problem. So Bitcoin volumes have been stagnant since the run-up in 2020. Active wallet addresses have gone nowhere, which is exactly what I just said. They've been replaced by institutions, measured by wallets with over a $10 million balance, which are rising in general, but the numbers are still pretty small. So we can take a look at this on Glassnode, and we can see that over the past couple months, since let's say July 2020, well, past year or so, that the Bitcoin addresses with a balance greater than 1 Bitcoin has sort of been on this rounding decline. If we take a look at the number of addresses with a non-zero balance over the past couple months, it's sort of been on a sideways trend. This is a large zoom out. Let me zoom in a little bit better, make it a little bit easier. Have been on a side trend, right? If we take a look at the number of Bitcoin addresses with a balance greater than 1,000 Bitcoin, we can see that we've seen a sharp decline right before that May crash. Now, what does this mean? Well, it simply means that institutional investors were either, one, taking profit, or two, manipulating the market. You can look at it in one of two ways, and that's up to you how you want to perceive the market. But of course, with institutions being in this arena right now, we are playing a whale's game, whether we like it or not. Traditional finance is manipulated beyond belief. The stock market is manipulated beyond belief. And now that these institutional investors have entered the crypto sphere, we are seeing the very similar thing happen in crypto. Now, it isn't necessarily a bad thing. It just simply means that we do have, in my opinion, some more legitimacy to the crypto space, because it means the institutional investors are here. They're going to do whatever they can to save their bags and protect their capital, in turn going to save our capital, as long as you have solid investment strategy and investment, or diamond hands as we may call it, and holding through these crashes or taking profits exactly when the institutional investors do. So you want to play the game with them. You don't want to be left holding the bag, as many people are in this space. because they don't quite understand that there are players out there that are more sophisticated investors than them, more sophisticated investors than I am, and most people in general. As I've said before, these institutional players do have more advanced tools. They do understand the market better than we do, whether we like it or not, because we don't have access to the same tools and the same metrics and so on that they do, or the same amount of capital that allows them to move the market and manipulate the market however they wish. So that isn't necessarily a bad thing. As long as we understand the game that is being played, we can play it ourselves. Now let's take a look at what else Raoul has to say here. So if we adjust for price, biggest investors liquidated and barely have returned, as I just mentioned. If Metcalfe's law applies, then network growth is currently slow, hence why the price is sluggish. The same is true for ETH, but there's a different factor at play here, hence the outperformance. Now, if we take a look at what Bitcoin has done versus Ethereum since 1 year ago, so let's go to the yearly open, 1st of January 2021 over to 1st of January 2022, we are up about 46%. Now, if we take a similar look at Ethereum over that same time period, which I've marked many times on this channel when we started this major uptrend, this line that I have highlighted here, Ethereum is up a mere 360%, pretty much a 10 times better performance than we've had for Bitcoin. Now, the reason for this is a couple, in fact. Due to DeFis and NFTs, the stronger narrative around ETH, volumes have remained more elevated. Addresses keep rising, but active addresses have stagnated all year as people rotated into different opportunities in the sideways market. Just as I mentioned earlier, people are rotating capital this time around, chasing those opportunities, whether it moves from DeFi to NFTs to yield farming to your grandmother's socks hanging on the line, providing the best yield. Whatever it may be, people are rotating the same amount of capital, meaning the same people are in the market, moving their capital around, looking for the best opportunities. And that is the perfect thing about DeFi, is that it does provide you with many more opportunities than a simple store of value, which at this point Bitcoin is becoming. So, but with Ethereum, higher volumes equal more Ethereum burned, more demand, and then ETH staking has reduced supply. So burning plus staking plus maintained volume is why Ethereum has outperformed Bitcoin by 4x in 2021. But with no net real new capital flowing into the space, attention moves to other chains, which also have proof of stake but earlier network adoption, taking volumes away from both Bitcoin and Ethereum, which is one of the main reasons why I shifted a lot of my capital, as I mentioned in previous videos, over to Luna, one of my favorite projects that are bringing a lot of these opportunities to the crypto space. So this is creating rapid rotations as people already in the space shift their assets around looking for returns. DeFi, then NFTs, then L1, lots of churn, but net, no new meaningful increases in market cap. Many of these L1s have the same staking and burning dynamic going on, but have small market caps, so their prices rise faster if volume picks up. All assets which are driven by network effects, so on, so on, so on. This is a good thing for the super focused on the details of each part of the market, but it tends towards a FOMO-driven market where latecomers who haven't done their homework get topped and tailed as the market moves on to the next thing. So understanding the narrative, as I've mentioned in previous videos, monitoring that narrative and monitoring sentiment allows you to capitalize on these opportunities because you can see where the capital is moving in the market. So he says, most investors are on the fence right now. Tell me that there is fear of regulation, that it is going to be a feature for a while now too. That will keep institutions out of anything but the larger protocols. It's been easier to allocate to VC to avoid market-to-market regulation fears. Now, if we take a look at what Sam Bankman-Fried has to say, he's optimistic about the institutional adoption of crypto in 2022, as am I. And the reason being is that things are making me optimistic, basically are more regulatory clarity in the US and globally, which I think could help a ton of institutional adoption. Now, as I've said many times before, overregulation is of course a problem for crypto. However, regulatory clarity is something that is very, very important for crypto, especially if we want huge institutional investment into this point. Now, one of the things that is important here, as I've said, if Bitcoin active addresses have stagnated, it means that at least for the time being, or in crypto as a whole, at least for the time being, we've seen a peak of retail FOMO, a peak of retail interest. Now, what is going to drive the market to new all-time highs? What is going to drive this crypto market cap to new all-time highs? Of course, it is institutional capital. And if we want that institutional capital into the space, we need to make sure that the institutions are comfortable with investing in the space. And that comes with regulatory clarity. Now, whether that comes in the short term or in the long term doesn't really matter to us. The longer, as I've said many times before, that Bitcoin and Ethereum remains at the prices that they're at right now, the higher or the more upside that we have in the long run. These short bursts to the upside are in fact very bad for the market because it does overheat the market. It provides investors with short-term profits and gives them opportunity to take profits and wreck those and basically provide us with a short-term top. Now, we could be seeing what is known as the super cycle, as I mentioned previous in the video, where it's very similar to what we have with the S&P 500 or what we have with the stock market, which is basically an up and to the right movement for infinity. And we have these shorter peaks and troughs throughout that period, which are pretty much mini cycles. So instead of this regular 3 to 4 year market cycle that we've had that relied on the Bitcoin halvings, instead we have these shorter 3 to 4 or 6 month cycles within that of these shorter bear markets, which is in fact what we've been having over the past year, where Bitcoin went into a bit of a downtrend over a 3-month period. We simply made it back up again, back into a bit of a downtrend, and perhaps over time we trend up and to the right without any major blow off top and a 3 to 4 year bear market. So in my opinion, this is a lot better. It does mean that we were able to play the sit on our hands game a lot better. You allocate your capital, sit back, relax, and hope that over time it goes up and to the right and outperforms inflation. Now, whether this happens due to regulation, whether this happens to institutional FOMO, whatever happens, whoever is leading this market is the ones that we need to be following. Now, once Tesla invested in Bitcoin earlier in 2021, this was the beginning of the first hype cycle where the narrative shifted. They were the first movers. They were seen as the Apple of the crypto space because they were innovators, they were the risk takers, and they got into crypto. Then Elon Musk came ahead and screwed everything up with the shift in narrative that Bitcoin and crypto is not eco-friendly, and that basically topped out the market. Now, again, leading back to the previous comment that I made, that the market is institutionally manipulated, that's a perfect example of that. A simple comment by a large company or large institution that invested in crypto pretty much topped out the market. So until we have more of these institutional investors that are comfortable investing in Bitcoin and holding their holdings long term, I believe that we will have these shorter term bear markets and shorter term bull markets, but overall trend is up and to the right until something in the macro environment changes. Now, whether that's due to hyperinflation, whether it's due to the dollar collapsing, who knows? But for the time being, it looks to me that we're going to have this slow and steady grind up and to the right, which I am perfectly comfortable with. So SBF, Sam Bankman-Fried, also says, if you don't know who he is, he's the CEO and founder of FTX Exchange, one of the biggest crypto exchanges in the world and one of the youngest billionaires in the world as well. Basically, every large financial institution I've talked to, every large bank, every large investment bank, pension funds, they're all eyeing the crypto sector. And I can confirm this as well. Often, because perhaps I'm a face of the space or some sort of crypto YouTuber and so on, I do get emails from very similar people asking me, how do I integrate crypto into the Swiss bank? How do I do this? I'm not the technical mind behind these things. I'm not the person to do that. Although I am someone who has an eye on the space, and basically because of the position that I'm in, I'm able to tap into these different areas and get an overview of what's happening behind the scenes. And I can confirm that SBF is 100% correct in saying this, because that is exactly what is happening in the space. Now, let's take a look at what else is happening. What else is going to bring the capital into the market? And one for me, of course, is NFTs and NFTs in gaming. As I've said, we're going to be having this rush or this flow of NFTs into the market. And we can confirm this with what has just happened with the NFT volume surging on OpenSea. Now, it wouldn't blow my mind if some company like, let's say, perhaps Twitter were to acquire OpenSea, because it would be in their best interest to do so. I think we're at just the very beginning of the NFT bull market. Even though we've had a major run-up over the past year with millions and millions of dollars, OpenSea generated over $700 million in sales this year. I think it's just at the beginning before Coinbase NFT comes over. The CEO of Coinbase has confirmed, saying that he believes that there will be more capital allocated to NFTs through Coinbase than crypto. And I too do agree with that. We've seen the surge of the past year, even though most people don't quite understand the true utility behind NFT. And right now it's just the speculative art market. There is a lot of NFT utility. And one of those is, of course, the utility behind fashion brands launching NFTs in 2022. One of the things that we're focusing on at YMH NFT is, of course, fashion as well. We do believe that the real-world utility behind NFTs is very, very important. So there's going to be quite an important link behind fashion and NFTs in this project, which yet to be announced. But an example is, every digital asset that or every real world asset that we have, whether that's the keyboard in front of me or whether it's the t-shirt I'm wearing, verifying ownership of these assets is a very, very important thing. And it's been quite a difficult thing in the real world, because you need a verified certificate. Perhaps you need it to be confirmed by professionals. The same thing happens in the art market. You might get a perfect replica of the Mona Lisa that's replicated brushstroke for brushstroke, that the originality cannot be confirmed unless, of course, confirmed by a professional. However, on the blockchain with NFTs, it takes a matter of seconds to confirm the identity or ownership of a specific asset. And these linking of real-world assets and ownership over to digital assets, not just bringing ownership back to the digital world, which is why NFTs are so popular right now, is confirming ownership in the digital world, destroying piracy, destroying the world of copying duplicates and so on, and having one of one or rarity and scarcity back in the digital space. Linking these two worlds, the real world and the digital world, is also going to be a very, very important part of NFTs as we head into the future, whether it's your title deed of your house, whether it's the ownership of your car. These things can all be verified on the blockchain, and NFTs can go along with these real world assets. So the same thing happens with fashion. Just as we have fashion in real life, just as in real life, where the physical card you can scan can give you access to a club, a utility can be anything from using the NFT as a membership pass, which is very similar to what we're doing with YMH NFT, to the ability to wear an asset in a game, or incorporating a sustainability or social responsibility benefit to the purchases of the NFT. So NFTs have a lot of real world utility that are yet to be introduced in a big way in the crypto space. And I think as we head into 2022, that is going to be one of the most important things, especially Metaverse and fashion. If you guys know anything about the Metaverse Fashion brand Artifact, was recently acquired by Nike, meaning that Nike and Adidas purchasing the Bored Ape and doing a Metaverse fashion play there, linking these real world assets to the blockchain and real world fashion to fashion on the blockchain, and fashion in the Metaverse is going to be a very, very important factor. Now, whether you like this or not, whether you like where the world is heading into this digital world, in this virtual world or not, does not matter. As I've said many times before, I personally am not a fan of it myself. I'm not a fan of living in the virtual world, although trying to deny where the world is going to leave you left in the dust without any pants on. Now, you don't really left out in the cold without any pants on, especially if you're in the metaverse world, because it might be cold, it might be warm, who knows. You want to be ahead of the herd, you want to be on the ball and making the gains with these opportunities that are presenting themselves right now in the world of NFTs and the metaverse. So with that being said, we do have a lot of big things happening in 2022. We've got a ton of stuff happening on Ethereum. We've got a ton of stuff happening in Terra and Luna. We've got a ton of stuff happening with the adoption of blockchain into the real world. And I'm super excited to see where this world is headed. Now, again, if you haven't yet, go ahead and follow me on Twitter. Follow me at YMHNFT on Twitter as well, and enter our giveaway if you haven't yet. If you made it all the way to this far in the video, please comment down below blue mouse. As always, I shall see you in the next video. Did I just zap you? I apologize. I'll see you in the next video. Bye-bye.